Hello friends, today's topic is BEPS Action Plan 11, wherein OECD has attempted to measure and monitor BEPS as well as possible indicators of BEPS activity has been mentioned in BEPS Action Plan number 11. So friends, BEPS Action Plan number 11, which is nothing but measuring and monitoring BEPS. Through this action plan, OECD has attempted to measure BEPS as well as monitor BEPS, wherein the effects of BEPS has been attempted to measure. OECD has acknowledged that it is very difficult to measure BEPS, and they have tried to establish several indicators. Six indicators have been established, wherein if such activities are followed by a M&E group or by any other entity, if such activities are followed, then there may be a possibility of BEPS being followed by that particular M&E. So, six level of indicators have been mentioned which may result in BEPS. Action Plan 11, Measuring and Monitoring BEPS. Measuring BEPS is challenging given the complexity of BEPS and data limitations. Fiscal effects of BEPS are significant. BEPS causes other adverse effects, economic effects as well. We have already discussed the effects of BEPS in the topic of background, wherein it is adversely affecting the competitors of M&E. There is no level playing field between M&Es who are indulging in practices of BEPS and other entities. It is also affecting developing countries in the terms of infrastructure, wherein in the form of reduced tax or nil tax, the benefits are not flowing to the developing economy, and this is seriously affecting their level of investment in the infrastructure and accordingly overall economy. So there are significant effects of BEPS fiscally as well as economically, and indicators of BEPS activity as per BEPS Action Plan 11. First, the profit rates of M&E affiliates located in lower tax countries, in tax haven countries. So profit rates in the of the entity in the lower tax country are higher than their group's average worldwide profit rate, meaning the entity which is part of the M&E affiliate and which is in the tax haven country, it is observed that the profit rate of such entity is higher than the average of the overall profit rate of the M&E group, meaning the income of the M&E group is being transferred to such an entity only to reduce taxes, only to reduce overall taxes of the group. Accordingly, profit are shown at a higher rate for such an entity where there is nil tax rate, or lower tax rate. This could be one of the indicator of BEPS. So friends, profit rates of a tax haven entity is higher than the group's average worldwide profit rate. Second, the effective tax rates paid by large M&E entities. The effective tax rates paid by large M&E entities are estimated to be lower than similar enterprises with only domestic operations. So competitors of M&Es, they are paying tax rate at a higher rate as compared to the effective tax rate of M&E groups. FDI is increasingly concentrated. Foreign direct investment is increasingly concentrated in the country where there is lower tax rate. So again, funds are being parked in a country where there is lower tax rate so that nil tax rate can be paid in that country when funds are repatriated, and also movement of capital from this country may be easily moved from one country to another. So that's why FDI is being increasingly concentrated in particular entity of M&E group, one of the level of indicators of BEPS. The separation of taxable profits from the location. The separation of taxable profits from the location of value creating activity, in our example, research and development activities, are not in sync with the royalty income. The separation of taxable profits from the location of value creating activity is particularly clear with respect to intangible asset. In this case, the intangible asset was, in our example, the intangible asset was patent, from which royalty income was derived by the funding company, and the phenomena has grown rapidly. So research and development activities are conducted by the source country and royalty income is flowing to the funding company. So separation of taxable profits, or you can say allocation of taxable profits, misallocation of taxable profits from the location of value creating activity, and which is clearly visible in the case of intangibles, and such a phenomena, such a practice is rapidly increasing. Royalties received by entities located in these low tax countries accounted for 3% of total royalties. And not only the resident country or source country, however, the royalty income is being transferred, is being parked in the low tax countries. However, in reality, if we see, they account only for 3% of the total royalties. So funds are only parked in the low tax country to attain nil tax rate or reduced tax rate. Again, this could be one of the indicators of BEPS. Debt from both related and third parties is more concentrated in M&E affiliates where there is higher tax rate. So interest reduction, benefit by way of interest on loan reduction. You can see this is highly concentrated in the entities where there is higher tax rate applicable. So income is being reduced by interest reduction. Loan may be taken from third party or member intra-firm loan. It could be any type of loan. It's only that interest deduction is shown in the profit and loss account only to reduce the income so that the M&E group is not required to pay higher tax rate in that particular country. So distortion by way of excess interest reduction, one of the level of indicators of BEPS. So friends, here you can see 6 level of indicators of BEPS activity has been mentioned by OECD under Action Plan 11, through which if indicated, if such practices are being followed through these 6 examples, then thereafter the tax administrators should come into action and starts monitoring such BEPS activity, and accordingly it can be addressed at a early stage only, so that this will enable the tax administrators to address the BEPS at an early stage. So friends, this concludes Action Plan 11, measuring and monitoring the BEPS activity by the tax administrators.